Forget the history. Let's talk about today's battlefield. We're not going back to 2012 or 2014. Everyone already knows the Ripple Stellar split story. What matters now is this. In 2025, who's actually delivering results? Because the war for digital payments isn't theoretical anymore. It's happening live. XRP is sitting at $2.28, surging on the back of renewed institutional demand and aggressive corridor expansion. XLM, holding firm at $0.2452, with a notable spike in active wallet activity and stablecoin volume. These aren't just numbers, they're signals of who's actually getting used. What we're seeing is two radically different strategies going head-to-head. Ripple is doubling down on institutional liquidity pipelines across the Middle East, Asia, and Latin America. Stellar, meanwhile, is building something far more disruptive, an open, tokenized payments network that sidesteps legacy rails entirely. This isn't about which is faster or which has lower fees. It's about which network is closer to unlocking real financial autonomy for users, and which one is still playing gatekeeper. The permission layer? Who controls the pipes? Let's not sugarcoat it. Ripple has built a closed-loop system. If you're a bank or high-volume payment corridor, RippleNet gives you tools to settle with insane efficiency. But the catch? You need to be approved. You need Ripple's blessing. Every node that matters is tied to the Ripple ecosystem. You don't get to plug in just because you believe in decentralization, you get in because Ripple signs off. This isn't conjecture. RippleNet functions like a permission blockchain in practice. It operates under enterprise-grade access control. That's great for institutional clients who need reliability and compliance. But it's a major red flag for open finance advocates. You're not building Web3 when there's a corporate middleman controlling entry. Now contrast that with Stellar. The entire network is designed for permissionless interoperability. You don't have to email anyone. You don't need a corporate partnership. You can write a smart contract on Sorabon, connect to a fiat off-ramp via Stellar's anchor network, and move digital dollars across borders in seconds. No gatekeepers. And here's where it gets real. Stellar anchors are popping up across regions where traditional banking barely works. Developers in Nairobi, Buenos Aires, or Jakarta aren't waiting on US approval to launch apps. They're using Stellar's rails today, permissionless, global, and live. That's why Stellar's seeing growth where Ripple isn't even playing. Because while Ripple's tech is sleek, it's stuck behind velvet ropes. Stellar's tech is lean, and it's already outside the gate. You can think of it this way. Ripple is rebuilding the banking infrastructure, but better. Stellar is replacing it entirely. Ripple wants the banks to win with blockchain. Stellar wants users to win with access. Ripple's winning in boardrooms. Stellar's winning in the streets, and the momentum is shifting. Liquidity wars, institutional access versus retail demand. Here's the twist nobody talks about. Ripple doesn't actually rely on XRP the same way Stellar relies on XLM as a utility token. Ripple's ODL system can use XRP, but it doesn't always. In fact, Ripple has built its B2B offerings in a way that abstracts the token away from the core value proposition. Remember when the Liquidity Hub launched without XRP support? That wasn't just a slip. It exposed the growing reality that XRP is increasingly optional in Ripple's own ecosystem. Instead of locking in usage of its token, Ripple has created a structure where institutions can enjoy the benefits of speed, settlement, and liquidity without having to touch XRP directly. From a business standpoint, it's a flexible model. But from a token holder's perspective, it's a problem. Because if XRP isn't required, what sustains its value in the long run? Now let's look at Stellar. XLM isn't an accessory. It's essential. Every transaction on the Stellar network incurs a small fee in XLM. Whether you're sending stablecoins, swapping assets, or interacting with Sorabon smart contracts, XLM is always moving. It's the grease in the engine. And that means demand for XLM directly tracks with network usage. This built-in dependency creates an organic feedback loop. The more real-world activity on Stellar, stablecoin flows, NGO transfers, retail wallets, the more XLM is needed. And unlike XRP's corporate-facing liquidity focus, Stellar's usage is being driven by millions of microtransactions, especially in underserved economies. Liquidity isn't just about size, it's about diversity. Ripple might move millions between banks, but Stellar is moving thousands daily between people. And those people are connecting via wallets, marketplaces, and stablecoins, not boardroom deals. So what scales better? A system where XRP is optional and exposure depends on enterprise adoption, or one where XLM is natively baked into every layer of the stack, from token transfers to DEX activity to Sorabon contracts. Ripple built a liquidity machine. Stellar built an economy. The Layer 1 shift Sorabon versus XRPL hooks. This is one of the most overlooked parts of the Ripple versus Stellar battle. The Layer 1 smart contract arms race. Ripple's XRPL is adding hooks and native AMMs, incremental, permissioned updates meant for enterprise-grade apps. Sorabon, Stellar's smart contract engine, is going for a Rust-based, WASM-native, DeFi-ready architecture. What does that mean in practice? Sorabon enables full DeFi functionality on Stellar without compromising security or compliance. You can build lending platforms, stablecoin swaps, even tokenized real-world assets, all on-chain. Ripple's XRPL upgrades are playing catch-up. Sorabon is playing chess. That's why Palago Labs, a DeFi trade finance protocol built on Stellar, is catching the attention of institutional DeFi players, without Ripple's branding. The Layer 1 shift Sorabon versus XRPL hooks. This is one of the most overlooked parts of the Ripple versus Stellar battle. The Layer 1 smart contract arms race, and it's more than just tech. It's a window into how each network sees the future of programmable finance. Ripple's XRPL is adding hooks, native AMMs, and limited scripting to support enterprise-focused functions. But make no mistake, these are conservative upgrades designed to maintain control. Hooks are meant to be light and permissioned. XRPL isn't trying to become a DeFi playground. It's building structured tools for banks and fintechs. Now flip the board to Stellar. Sorabon is not just a feature, it's a full-on evolution. Built from scratch using Rust and WebAssembly, WASM, Sorabon enables complex, permissionless, and composable DeFi on Stellar. It brings Stellar from a fast payment chain to a full Layer 1 capable of supporting lending protocols, stablecoin swaps, multi-asset liquidity pools, NFT registries, and even identity-linked smart contracts. It's not hypothetical. The groundwork has already been laid. Palago Labs is using Sorabon to build trade finance tools for SMEs in developing markets. Tokenized T-bill protocols are experimenting with Sorabon to issue yield-bearing stablecoins. Devs are migrating from Ethereum testnets for cheaper, scalable, and more compliant alternatives. And the kicker? You don't need a handshake from Ripple Incorporated to launch. Sorabon is open for any builder, in any region with no gatekeeping. Meanwhile, Ripple's upgrades feel like corporate catch-up. XRPL scripting tools are limited in scope and often rely on validators pre-approving upgrades. That might work for bank APIs, but it doesn't inspire innovation. This is where Stellar pulls ahead. It's giving developers full programmability without sacrificing compliance. That's a rare combo. The future of finance won't be written by permission hooks. It'll be built with full-stack smart contract engines like Sorabon. Hidden on-chain signals, the smart money knows. Take a look at the data. Stellar's active wallet growth is outpacing XRP's. Total value transferred on-chain via Stellar has surged by 170% YOY. Developer activity on Sorabon doubled in Q2 2025 alone. And here's the kicker. These aren't just vanity metrics. They're footprints of something deeper happening under the surface. Stellar isn't waiting for headlines. It's being used by real people, in real economies, for real value. So why hasn't the market caught up? Because most investors are still stuck watching courtroom drama and Twitter hype. They're looking for news cycles. But smart money watches data. When NGOs like the UN start funneling relief payments via Stellar USDC, bypassing legacy banking systems that take days to clear, and do it in seconds for a fraction of a penny, that's not just a blockchain win. That's a geopolitical shift in money movement. When MoneyGram reroutes cross-border cash flow from outdated SWIFT systems to Stellar rails, that's not just a partnership. It's a roadmap for legacy institutions to migrate into crypto. These are the subtle tremors that precede seismic moves. And they're showing up in the metrics. Average transaction size on Stellar is growing. Stablecoin velocity is increasing. Developer grant uptake on Sorabon hit an all-time high. Now compare that to XRP. Price moves are still glued to external narratives, regulatory news, exchange relistings, macro headlines. Sure, utility is there, but it's fragmented, controlled, often optional. RippleNet clients can use XRP, but they don't have to. That's not true demand, it's token flexibility. Stellar? No such ambiguity. If you use the network, you use XLM. And increasingly, people are. The real alpha? It's not in the pump. It's in the pattern. And right now, the pattern says Stellar is being accumulated, not hyped. Used, not just traded. That's why Smart Capital is quietly positioning itself around Stellar's ecosystem. Not for the moonshot, but for the moment when the world finally realizes which network is actually doing the work. Compliance, not chaos. Who's more future-proof? Ripple won a partial victory in court, but the US isn't done regulating crypto. XRP remains under scrutiny. Meanwhile, Stellar quietly positions itself with regulatory-first infrastructure, and that's a crucial difference. In 2025, you don't win the global financial race by being the fastest or loudest. You win by being compliant, trusted, and seamlessly integratable into legacy systems. Stellar understands this. That's why it's collaborating with the IMF, central banks across Africa, and major NGOs to build stablecoin systems that meet the highest standards of oversight and transparency. We're not just talking about theoretical partnerships either. Stellar is helping NGOs move real-world funds in humanitarian corridors, legally, efficiently, and on-chain. It's positioning itself as the blockchain infrastructure that regulators and policymakers can actually work with. Ripple, on the other hand, is still navigating regulatory landmines. Even with partial clarity in the US, the XRP token remains a magnet for scrutiny. Every major move still comes with a legal footnote. And while RippleNet continues to expand globally, it does so with the kind of caution that comes from years of regulatory whiplash. This is where Stellar flips the script. While Ripple focuses on getting banks on-chain, Stellar is getting blockchain into systems governments already trust, like digital ID frameworks, payment aid disbursement pipelines, and pilot CBDC testbeds. Let's be blunt. Governments don't want to fight lawsuits. They want plug-and-play solutions. Stellar is becoming that. It's not chasing hype. It's building rails that don't need a token moonshot to survive. Which network is more likely to get the green light when central banks ask, who can help us digitize our currency? The one building with compliance baked into its DNA, not the one still trying to untangle it from theirs. Price, volatility, and investor psychology, what the charts won't tell you. Here's the raw data as of July 3, 2025. XRP, $2.28, up 14% monthly, strong Asian corridor liquidity. XLM, $0.2452, up 7.8%, steady stablecoin volume via Stellar USDC. On paper, XRP looks stronger. It has the optics, big spikes, double-digit gains, and a thriving whale culture. But dig deeper and the pattern becomes clear. XRP trades on headlines. It's a high-volatility asset built on news cycles. Court wins send it flying. Legal drama drags it down. Influencer rumors spark flash rallies. Wash, rinse, repeat. That kind of volatility may excite traders, but it's not the foundation of long-term network value. The price is often disconnected from what's actually happening on-chain. Now compare that with Stellar's XLM. It's not pumping overnight, but it's pulsing with organic, transaction-based growth. XLM isn't being traded like a meme coin. It's being used daily, quietly, and globally. Behind the scenes, Stellar is powering stablecoin transfers across borderless apps like Vibrant and Lobster. It's embedding white-labeled wallets into fintech stacks in Latin America. It's routing remittances in Africa. And in all of those flows, XLM is quietly collected in microfees, building constant compounding demand. There's no whale alert needed when a network moves $100 million in stablecoins across 50,000 wallets in a week. That's not speculation. That's velocity. And here's where investor psychology flips. XRP holders are often reacting to market catalysts, trading the story. XLM holders are increasingly behaving like long-term infrastructure investors, accumulating the rails. One network is emotional, the other is operational. You don't need a parabolic pump to validate a protocol. You need network effects, real-world integration, and sticky demand. Stellar is stacking those quietly, consistently, and globally. And while XRP's next move might come from a headline, XLM's next move will come from usage metrics that never stop climbing. Which one's actually closer to the future of money? If your idea of the future is banks using blockchain behind closed doors, XRP might be your pick. It's polished, it's enterprise-ready, and it's built to slot into traditional finance like a plug-in. But if your vision is borderless, programmable money that works on phones in Nigeria, Argentina, or the Philippines, then Stellar is miles ahead. Because that future doesn't run through Wall Street. It runs through WhatsApp, prepaid SIM cards, and peer-to-peer remittance apps. This isn't just about price or partnerships. It's about permissionless reach, who can build on it, who can access it, and who benefits. Ripple is optimizing the banking stack. Stellar is rebuilding the financial stack for everyone else. Ripple still owns the narrative. It's got the headlines, the courtroom drama, the institutional pitch decks. But Stellar? Stellar is owning the outcomes. You won't see it on CNBC, but you'll feel it in a Ugandan microloan app or a USD transfer hitting a smartphone wallet in Buenos Aires in 5 seconds flat. XRP may dominate when crypto is a topic at Davos. XLM is winning where crypto isn't even part of the conversation, just a tool solving real problems in real time. So, which one is actually closer to the future of money? The one powering billion-dollar corridors on permissioned rails, or the one giving a rural entrepreneur access to stablecoins, liquidity, and smart contracts without asking anyone for permission? In a world that's shifting toward decentralization, access, and programmable finance, Stellar isn't catching up. It's already there. If you're tired of the same recycled talking points, subscribe to Be Crypto Smart. This is where we break through the noise, analyze what actually matters, and uncover what everyone else is missing. The utility race is on. Are you watching it closely enough?